too, but okay. All right. Well, welcome everyone. If you don't want to be, this is streaming on YouTube live, and it will be also recorded as well. So if you do not want to appear on screen, then you should turn your video camera off and mute yourself, but because it will be public and it will be up until December 31st. So that's that piece. Thank you for coming. This is Calvert Library Program in partnership with Social Security, and Diana Varela has presented a number of times for us and just is a great resource for information and can answer pretty much any question we've ever thrown at her. So I am going to turn it over to her, and we have somebody else coming in right now. And do we want me to go ahead and start sharing the screen? I was sharing slides. Diana?
I am unable to share the screen, and that's why you have to send the slides.
I didn't know if you were ready to start with those.
I am ready. I am ready. So you can share your screen, please. Thank you so much. Okay, great. And we're going to start it. First of all, on behalf of the Social Security Administration, I would like to say thank you once again to the Calvert County Library System for allowing us to provide this information to you, community residents. Also on behalf of all of us at Social Security, we wish that you and your family continue staying safe and well, okay, during the rest of the health crisis. It looks like we are almost at the end of it. So thank you so much for attending this program. And what I would like to do is, I will speak about retirement benefits today. And I would like to answer questions as we go along the presentation. So what I will do is I will provide some basic information, and then we will stop so I can answer the questions that you have about your retirement benefits. But before we do that, I actually would like to, in the next slide, provide you with information about how to contact Social Security Administration. That is one of the most common questions that we receive from people in the community at this time. Are the Social Security offices open? And the answer is yes. We actually have never closed during the last 2 years. Can you believe that? 2 years already. What happened is that our service and delivery is a little bit different than what it was pre-COVID. The best way to contact Social Security and conduct your business with the administration is by going online. Please visit ssa.gov. You can, if you don't get benefits yet, you can find information, you can find publications, calculators, and benefit planners. And if you're already getting benefits, you can do many things online in terms of changing address, direct deposit, or even requesting information from your records. So please try to go online first. If you cannot finish your business online, then contact us. Toll-free number 1-800-772-1213. Representatives available from Monday through Friday from 8 to 7 p.m. You can also contact your local office. If you take a look at the top of the screen, you know, where it says menu, if you click on menu, then you will have a drop-down box. And one of the options that you have is contact us. If you give us your zip code, you will get the direct phone number for your local office. So please try to do that. And I'm glad that you're attending this seminar because Social Security provides retirement benefits, and we all want to be ready when the time comes for retirement. But retirement planning takes time. In the next screen, this is basically, next slide, please. You will see that this is the perfect model in regards to retirement income. You should only have your Social Security benefits as the foundation of the income that you receive. It has to be supplemented by other sources. Pensions, if your employer provides pensions, please contribute into your pension. If you have a 401k plan, if you have personal savings, personal retirement accounts, investments, or other sources of income. If today that you are working, you can take a look at your pay stubs for 1 month. I can tell you that for most workers, Social Security income in regards to benefits will only be about 40% of the pay that you take. Actually, your net pay, your benefits will only be about 40% of that income. And if you talk to experts today, they will tell you that we really need from 70 to 100% of the pre-retirement income. So if we only have Social Security that will only give us 40% of the pre-retirement income, that's not the kind of retirement we want to live, correct? So therefore, please take your time to make plans for retirement and obtain information ahead of time. We cannot wait until we are at the doors of retirement. And Social Security is with you on this. We have many tools and information that will help you be ready for retirement. In the next slide, you will see which one is the most important tool that will allow you to be ready when the time comes. My Social Security online account. If you have an online account, you will get information about the Social Security benefits that you qualify for, and more importantly, the amount of the benefits that we will pay to you and to your family in the future. You can even get information on benefits in the present if anything happens to you. To create an online account, you have to visit us online at ssa.gov. As soon as you enter the home page, there is a section that says My Social Security. You just follow the prompts and one screen after the next screen. You're going to have to answer some personal questions. But once you open and create your online account, you will have access to your personal record. You will be able to take a look at your earnings record from the very first summer that you worked when you were in high school, if that is the case, to the latest years. Looking at your earnings record is very important because we use those earnings to give you eligibility to benefits and also to calculate the benefits that we will pay to you. So please create your online account. If you are over, a few years ago, if you were over 25 years old, you will get your Social Security statement every year by mail. Nowadays, we don't mail the statement to every worker. We only mail the statement to workers that are 60 years and over. So if you are not 60 yet, you're not getting your statement. But if you have your online account, you will always have access to your statement. And even if you're 60 years old, I recommend that you create an online account because you're actually getting closer to the age in which you will be applying for benefits. And if you have your online account, that will be much easier. So please, it doesn't matter what age you are. For as soon as you are over 18 years old, you can create your online account so you can get that important information about your present and future Social Security benefits. When it comes to retirement, let's talk about the eligibility requirements to get retirement. In the next slide, you will see that there are two minimum eligibility requirements. One of them is that you are at least 62 years old And the other one is that you have 40 work credits. What is a credit? A credit is actually a measure of work. We are going to determine if you have worked enough paying into the Social Security system to find out for what benefits you are eligible for. In order for you to get one credit, you need to make a specific amount of money in the year 2022. If you make $1,510, you pay taxes over that amount. And of course, that is just working. You're working, you make that amount, you pay your taxes, you get one credit. You can only get 4 credits maximum in 1 year, 40 in your lifetime. So as you can see, basically with 40 credits that you need for retirement, that is only 10 years of work. Most workers, even if you make the minimum amount of wages, you will get enough earnings to get the credit in 10 years. For some of the workers, it might take a little bit longer. But with 40 credits, you will qualify for retirement. Now, I think that most of us will work for more than 10 years. What do we do with the rest of the earnings? We actually use them in the calculation of your benefits. These are actually the first 3 steps that we use in the calculation of Social Security benefits. In the first step, we are actually going to use and take a look at all of the earnings that you had through your entire working life, through your entire career. We will take a look at all of those years. We will increase the value of those years to current value because of inflation, wage levels over time. And then we are going to select 35 years. We are going to get to use the years in which you have the higher amount of earnings. For most of us, those years will be at the end of our careers because that's the normal trend of earnings. If you start working, if you continue working steadily, your earnings just continue increasing year after year, correct? That's the normal trend of earnings. However, that's not the truth for a lot of workers. Some workers start a career, then stay home for many years to take care of the family. We might even have workers that do not get to work for 35 years. They might have only 25. It doesn't matter. We will look at your entire earnings history. If you have more than 35, we will pick up the higher 35 years. If you don't have 35, we will use all of the years that you had, and we will arrive to an average index monthly earnings, based on a 35 average, and then we will apply a formula. In the next slide, you will see what is the rest of the calculation of your Social Security benefits. That is basically how we are going to calculate your benefits. I can tell you that for each one of us and for every worker in the country, the benefits are calculated based on the worker's own earnings history, the number of years they work, the amount of the earnings they had over their working careers. And the other factor that impacts the amount of benefits that we will get is when we actually take the benefits. But before we talk about the age, let me stop here to find out if anybody has any questions. But I would like to ask you to please answer me questions on material we have covered so far. So far, we talk about how to contact Social Security, how to create an online account, the importance of having an online account, and eligibility to benefits, how we will calculate your benefits. Any questions so far? If no questions, you can either send it to the chat or if you can unmute yourself. But so far, I don't see any questions. So let's continue then. We'll stop once again in a few. So once again, coming to we were talking about the calculation of Social Security benefits, and I said that, the factors that impact the benefits that each one of us will get will be the number of years you work, earnings you had, and then the age in which you decide to take the benefit. And I can tell you that that is probably the number one question that we get from people in the community. What is the best age to start collecting Social Security benefits? And I can tell you that I have information, but I don't have an answer for you. I don't have an answer. The reason of that is because it's going to be personal. You have to make a personal decision. And there will be many, many factors that you have to consider before you find out when is the best time for you and for your family to get the benefits. But let's talk about the options, please. In the next slide, you will see that I already told you one of the options. You can file early at 62, but also the other option is you can wait until you are your full retirement age. And full retirement age is different for all of us because it depends on the year that you were born. So take a look at the first column, that's years of birth. The second column will tell you what is your full retirement age depending on the year that you were born. Full retirement age means that if you wait to file for benefits until that time, until that age, we will pay you 100% of the benefit. That's one option. Wait until full retirement age. But what about the other option about filing for benefits early at age 62? Well, yes, that's an option, but you need to know that if you file for your benefits between 62 years, the earliest that you can file, and your full retirement age, your benefits will be reduced. They are prorated. Of course, the reduction is about 6% per year that you file for benefits before full retirement age. So for a worker, let me give you an example in the next slide. For a worker whose full retirement age is 66, and if we are paying a benefit of $1,000, take a look at the column that says 66 as the full retirement age, the year in which the person starts collecting benefits. And we said that the benefit is $1,000 at full retirement age, we pay $1,000. However, if you take a look at the bars towards your left, that is when the worker is filing between 62 and full retirement age, and you can see the difference. If a worker whose full retirement age is 66 files at the age of 62, we're talking about 4 years, right? I said the reduction is about 6% per year. So if a worker is filing for early benefit at 62, there is a permanent reduction on about 25%. What if the worker waits 1 more year, files at 63? Well, then at that time, the reduction is going to be 17%, right? It's about 63, then the reduction is going to be 19% because it's about 6% per year that the worker files before full retirement age. It is prorated by month. Prorated by month. So those are two of the options that you have. However, there is one more option, which is you can file for benefits after your full retirement age. And if you actually elect that option, you will start getting delayed retirement credits. And that is an increase in your benefits. For every year that you wait to file for benefits past your full retirement age, we're going to give you 8% increase. That increase goes until you're 70. So you can get those 8% increases every year if you file for benefits at 70. So in the worker's case, whose full retirement age is 66, filing at the age of 70, 8% increase, worker files 4 years later, at the age of 70, the worker will get 132% of the benefits. After 70, we don't get those increases anymore. So when you ask the question, when is the best time? I can tell you about the options. You can file as early as 62. Do not delay benefits past 70 because past 70, you don't get any more increases. Anytime in between 62 and 70. When is the best time? I don't know. You will have to, as I said before, take a look into many factors that will allow you make the right decision for you. You have to take a look at factors such as your health. Are you in good health? I just got a message today from a community partner who has an employee, only 62 years old, but actually the employee has a medical condition and needs to file for disability as a matter of fact. So health is one of the factors. Another factor is work. Are you still working? Do you still love what you do at work? What about health issues of a family member? Okay, you might be in good health, but maybe you need to stay home to take care of a loved one that is sick. What about your financial responsibilities versus the income that you will have on retirement? There are many, many factors that will allow you, once you take a look at all of those factors, it will allow you to make the right decision on your benefits. And of course, one of the factors, the biggest probably, is income. The income that you will have upon retirement. And when it comes to income, you need to know that we will allow you to work if you would like to work to supplement the income that you have on retirement. And the next slide, let's talk about working and receiving Social Security benefits at the same time. You will be allowed to work. Happen to be that dependent on your age and the type of benefits that you receive, the amount of earnings that we will allow you to make will be different. We even allow people who are receiving disability benefits to actually, to actually receive benefits and work at the same time. So what happens if you're receiving retirement benefits, but you are only receiving benefits at the age of 62? Can you work and receive benefits? And the answer is yes. But if you're only 62, between 62 and your full retirement age, this year, in the year 2022, that amount changes. We will allow you to make $19,560. That is what you're allowed to work and make in the year 2022. And if this is the first year of your application, it doesn't matter how much money you made before you started collecting the first month of benefits, but the month that you start collecting your benefits, you have a limited amount. and we do it on a monthly basis. This year, if you make $1,630 a month, and this is the first year of your application, and that is from the very first month that we are going to pay your benefit, then we can pay your benefit for the month. If you make more than that, we don't pay you the benefit for that month. As you can see, if you are already full retirement age, it doesn't matter. You can have any amount of earnings, and we will pay you your benefits every month. Every month. Now, what happens for people who are going to be full retirement age this year? However, they wanted to collect benefits from the beginning of the year. That's the information you see in the middle. At the year that you reach full retirement age, you have a limit of earnings in the month before you reach your full retirement age. But as you can see, that is much higher. The limit is much, much higher in the months before you reach your full retirement age, if you're getting the benefits at the same time. And once you reach your full retirement age, it doesn't matter. From that month and on, you can make as much as you want, and then you will still get your Social Security payments. So this is one of the factors that you need to take into account, besides the other ones that I already mentioned. Another factor that you need to take into account is payment of taxes. And in the next slide, I'm going to give you some information about taxes and how it relates to Social Security benefits, but no, please, that I am not an expert, okay? So this is just an example of how earnings impact if you actually make more than what we allow you to make. Let's go over this example as a matter of fact. So as you can see, once again, the amount that we allow you to make if you're under full retirement age receiving benefits is $19,560. So if we have a worker that is actually going to earn that amount or less, we're going to pay a benefit. If the benefit is $700, well, we pay 700 times 12, $8,400. Now, what happens if the worker goes over the limit for a little bit more? Then we start deductions of the Social Security benefits. For every $2 they go over the amount that we allowed them to make, then we are going to take $1 of benefits. So the more the worker earns over the amount that we allow, then the less benefits that we pay. So take that into consideration, please. Now, let's talk about taxes. As I said in the next slide, I'm not an expert on taxes, but we want you to be prepared. We don't want you to have any surprises upon your retirement. So please know that if your other sources of income, including some of your benefits as well, is more than $25,000 and you are a single taxpayer, or $32,000 for couples, then be prepared. You're going to have to pay taxes on some of your Social Security benefits. Please know that. Also, since we are not the experts, we will refer you to talk to the IRS, because no Social Security employee can talk to you about taxes. We cannot give you more information than what it is what I am providing to you right now. In the next slide, if you want to have at least some sort of information ahead of time to find out if you will have to pay taxes, this is basically the formula, if you want to call it, that is going to be used. Please take all of your adjusted gross income, your pension, if you project to start withdrawing your 401k plans, if you have other sources of income, rental income, you're still working, and also take into consideration an amount equal to 50% of your benefits, any interest and dividends that you receive, then if your combined income, once again, is higher than the threshold of $25,000 for single taxpayers or $32,000 for couples, be prepared, you're going to have to pay taxes on some of your benefits. So please contact the IRS at irs.gov, or you can give them a call at their toll-free number to get more information. Also know that you can request that Social Security withholds taxes, federal taxes from your Social Security benefits. So that way you pay your taxes along the year, okay? That is one of the options that you have. And let me stop here one more time and see if anybody has questions on anything that we covered so far. Questions about taxes, questions about working and receiving benefits, calculation of benefits. Any questions? You can send it through the chat, or you can unmute yourself. I believe that you have that option. Any questions,
Diana?
please?
Diana? Hello, can you hear me?
I can hear you.
Okay, you know I'm going to have some questions. Are you ready?
I am ready.
Okay, it's Jeffrey again.
And those are questions that on material we covered so far.
Yes, on the material. So
okay.
To earn the maximum amount, and it was on one of the slides, I believe it was every 4 months within 10 years. If we can go back maybe 2 more slides. So if you have a salary and if you do some type of contract or 1099 work, but obviously you record it and pay taxes upon it, obviously we know as a larger amount because nothing had been deducted at first. The amounts of those two, the salary and contractual money, that's what's added for consideration for what you receive in Social Security if you wait to the maximum amount, correct? Because I think it's over a 10-year period, correct?
Okay. A 10-year period that you are actually going to earn the 4 credits.
Yes.
Okay.
And
it's a couple, it's 2 different things. Okay. Because number one is you have a limited amount that we use for you to get the credits, to earn the credits.
correct.
So you earn the credit with very minimum. Okay. Once again, this year, $1,510. So basically with $6,040, you will make enough in earnings. You will make enough in earnings in the year 2022 to calculate, to actually get the amount of earnings necessary to earn those 4 credits per year. So now, the only other thing is that when you are working, and you said that in this scenario, you have regular employment, but you also have like self-employment on a 1099.
Yes.
Well, you will have more earnings than what is needed to earn the credits, right? There is a maximum amount of Social Security earnings. This year is $147,000. Okay, so if you make between your employment and your self-employment net earnings up to $147,000, that amount is going to be considered when we are actually going to calculate your benefit. Does that make sense to you?
Yes, it does. And that's what I was wondering.
Okay.
Because you are recording and paying the taxes on that 1099 amount, it is considered the 2 added together, the salary and the secondary 1099. it's based upon those numbers, correct?
Yeah, but not the entire amount of the 1099, because on the self-employment, on the 1099, the amount that you receive, you might apply some work expenses and so on, so on. What we use to add to the earnings in the year that you have to calculate the benefits is going to be your net self-employment earnings.
Okay. All right. And so that would be something to pay close attention to when doing the taxes, because you're correct, where you have deductions on 1099 work.
Exactly. So, and you can take a look at your earnings record, take a look at your, tax returns. The amount that is credited to you as Social Security wages will be on your Social Security wages that show the box that shows on your W-2 form for your employment, plus the self-employment net earnings.
Yes, ma'am.
You from your tax return schedule SE,
right?
Self-employment.
All right.
Now, if your employment and your self-employment is above the Social Security wages, then of course, we are only using up to the total amount of Social Security wages, which is $147,000 in the year 2022.
Right, but that's like the maximum / minimum that you could make if you're above or below. If you're above it, no matter what, it's still the 147. So that's good.
Exactly.
Here's my secondary question, please. So for approximately 28 years, I have a retirement system that isn't part of Social Security under a government structure. But I have been working for over 20 years where taxes, Social Security, and everything has been taken out. As time progresses and you're earning more, do you all do the calculations based upon the highest amounts? So let's say, obviously, the last 10 years since 2012 to now 2022, you're obviously earning more. Is that where the calculation is created to figure out how much you would earn in Social Security?
Remember that the calculation is based on 35 years of earnings. 35 years of earnings. So
is it averaged
whatever
out?
They are in your earnings history. So if you have 28 years of earnings, if you end up having 28 years of earnings only, that is what we're gonna use. But as the average is on 35.
Okay, the average is 35, but it does take into consideration if you're under the 35.
Of course, if let's say that you end up having only your 28 years, well, you only have 28 years paying into the system, right? So we're gonna use all of your years. There will be no selecting higher years because you don't have 35. That is when you have a worker that has 45 years. So we're gonna take a look at the 45 years in the first step, and then we will pick up the highest 35 out of the 45. You will now have 35 years.
So it is the highest years of that, because obviously inflation and everything else as it goes on through the years, Social Security takes that into consideration also.
Well, we use the highest 35. If you don't have 35, we will use your 28.
But would my first 28, which I'm already on a retirement system, that would not be considered, would it? Because monies for Social Security were not paid in during those 28 years.
Okay, now that will impact your pension when you start collecting Social Security benefits and you receive that pension for working which you did not pay into the Social Security system. That's going to impact your Social Security benefits. You might have your 40 work credit, but if you receive a pension for work, in which, you know, some years or the entire time you did not pay into the Social Security system, that will reduce your benefit. Okay?
Yes, ma'am. All right, thank you.
You're welcome. Okay, let's continue, and then we will stop for more questions at the end. Another factor that you have to consider when it comes to finding out when is the best time for you to apply for benefits is benefits that we can actually pay to family members. Okay. In the next slide, I have basically, can you advance 2 more slides, please? I think that we talk a little bit about working and receiving benefits, and also taxes. Let's talk about family benefits now. In the next slide, please. In regards to family benefits, we can pay benefits when the worker is alive, but the worker must be receiving retirement or disability benefits, and also when the worker is deceased. Most people tend to believe that we only pay benefits when the worker is deceased, and that is not so. Of course, we pay survivors benefits, but we can also pay benefits when the worker is alive, but receiving retirement or disability benefits. So the column towards your left shows what are the benefits that we can pay when the worker is alive, which are benefits to a spouse of any age, if the spouse has a child under the age of 16, or an adult child but is disabled, and a disabled adult child that became disabled before the age of 22. We can only pay benefits if the child, once again, if that spouse is of any age, but if the child, there is a child in care, and child in care is once again defined as children under the age of 16 or disabled adult children. Also, we can pay benefits to spouses that are at least 62 years old or any age, and having a child in care or full retirement age. Of course, for spouses with a child in care and full retirement age, we're going to pay the full amount of the benefit. At the age of 62, the benefit is going to be reduced. Now, the amount of benefits that we can pay to spouses is an amount equal to 50% of the worker's full retirement age amount. Example, if the worker is going to get $2,000 at full retirement age, then that spouse can get $1,000. We'll do some scenarios in regards to spouses, and you will see how this really works. Now, take a look at the column towards your right. That is when the worker is deceased. For survivors, we can pay benefits once again to a widow or widower, any age, with child in care. Child in care, once again, is age with a child that is 16 or younger, or a disabled adult child. But we can also pay benefits at the age of 60 or even full retirement age. We even pay benefits to widows and widowers that are disabled, and they can get benefits at the age of 50. Also, take a look at the range of benefits that we can pay to a surviving spouse. It can be anything from 71.50 for widows or widowers at the age of 60, or even 100% of what the worker could have gotten. There is one difference in regards to when the worker is alive or the worker is deceased, and that is if the worker who is deceased earned the late retirement credits. Remember those 8% increases that the worker got because they were waiting to file for benefits after full retirement age. We can use that amount to pay the surviving spouse. As you can see, when the worker is alive, we use 50% of the full retirement age amount. That's a difference when the worker is deceased. Besides the spouse, in the next slide, you see that we also pay benefits to divorced spouses. Same requirement in regards to age, 62. But the other requirements for the divorced spouses are that they were married to the worker for 10 years and are single at the time of application. We can pay the same amount to a divorced spouse, to a current spouse if the worker has remarried. The only difference is that for a spouse that is filing as a divorced spouse, we can actually pay the divorced spouse. They can file for as long as the worker is at least 62. The divorced spouse don't have to wait until the worker files. However, the current spouse has to wait until the worker files. Next slide, please. Of course, you know, if a spouse files for benefits early, before full retirement age, they will be taking a deduction in the benefit. Okay, so always remember that for any benefits that you file with Social Security, if you choose to get the benefit before your full retirement age, you will get a permanent reduction in the benefit. Now, next slide, let's do a summary on spouses benefits, and let me go through some scenarios so you can understand a little bit more on what we will do when you file for benefits or where your spouse files for benefits if you are married. As a matter of fact, once again, remember that the worker must have filed for benefits before a spouse can file for benefits. So the worker has to file first, and the maximum benefit for a spouse is an amount equal to 50% of the worker's full retirement age. A scenario is, let me give you a scenario so I can explain a little bit better. Let's say that we have a couple. In this couple, there is one of the spouses who never works outside the household or doesn't have enough credit. If the worker is going to get $2,000 at full retirement age, at the spouse's own full retirement age, he or she will get $1,000. That's 50% of the worker's full retirement age. Total benefit, $2,000 for the worker, $1,000 for the stay-home spouse, $3,000 for the family. Of course, if that spouse takes the benefit early, we will apply a reduction to the benefit. Now, let's take a look at the next bullet. If a spouse's own benefit is less than 50% of the workers, we will combine to equal 50% of the workers. Let me give you a scenario on this one. Let's say that in this scenario, both spouses work. One spouse only works part-time. If you work part-time, less earnings, less benefits, right? Okay, let's say that the spouse with higher earnings will get $2,000 at full retirement age. Let's say the spouse who only works part-time can only get $400 at full retirement age on his or her own record. Well, there will be a comparison on the benefits that we can pay to each spouse. How much they can get on their own record, how much on the spouse's record. For the spouse that only gets $400 on his or her own record because, you know, only different on the benefits that they can get on their own record or the benefits that they can get on their spouse's record. It is either only $400 on his or her own record because they work only part-time, right? Or $1,000 as a spouse from the worker with a higher record. Which one would you rather get? Only $400 or $1,000? In this scenario, what we will do is we will still pay the first $400 to that spouse that he or she earned, but a difference of 600 from the worker with a higher record, because that will equal the higher amount. We will pay a total benefit of $3,000 to this family, $2,000 for the worker, $1,000 for the spouse. We will combine the benefit in that case. But there is one more scenario probably for most of us. Let's say that for in a couple, both of them work, both of them had about the same amount of earnings. Let's say that one of the spouses can get $2,000, the other one $1,800. Each one of them on their own record, well, that will be the higher for each one of them, and that is what we will pay. We will do this when you file for benefits, when your spouse files for benefits. We will take a look at how much you can get on your own, how much on your spouse's record, so we can pay you the higher amount, the higher benefit that you can be eligible for. You can do this exercise at home. If you and your spouse have your online account, please take a look at, do this together. Take a look at your own statement. Take a look at what represents full retirement age for you and also for your spouse. Each one of you, take a look at that amount. If you see that 50% of your spouse's full retirement age amount is higher than what you can get on your own record, you know there will be a difference. Or it might be the opposite way. It might be that your spouse might be eligible to a higher benefit on your record. We will do this comparison for you, but for planning purposes, you can do this at home, okay? Please do that ahead of time so you will know. Another benefit that is very important to talk about is benefits for children. In the next slide, you will see what benefits we pay to children. And that is going to be for children. All children under the age of 18 and single can get benefits. But we also pay benefits to children that are single between age 18 and 19, if they are still in high school in full-time attendance. And we can pay benefits to children at any age. They can be adults, but if they are disabled and became disabled before the age of 22, we're going to pay benefits to children. These are the same requirements when the worker is alive or the worker is deceased. The only difference is that if the worker is alive, we're going to pay an amount equal to 50%. In other words, if we have a worker that is going to get $2,000 at full retirement age, then we have a benefit of $1,000 for that disabled adult child. That's the benefit, an amount equal to 50% when the worker is alive. It can be 75% if the worker is deceased. This information is part of the factors that you need to take into account, finding out when is the best time for you and your family to apply for benefits. Once the time has come, please contact us 3 to 4 months before you want your benefit to start. In the next slide, you will see that basically the ways that you can file your application can be, first of all, try to do it online. It's very secure, it's very convenient, and it's very easy. It's very user-friendly. You will just be answering questions, information that you know about yourself and work, your family. So you can complete your application online, and one of the representatives at the local office will review to make sure that everything is correct, completed, that you are actually choosing the best option in terms of when to start receiving your benefits. The only other way to do it is contact us. Call the toll-free number or your local office to schedule a telephone appointment. Either way that you decide on how to file for benefits, please contact us 3 to 4 months before, okay? Once we review your application, we will let you know if there are any documentation that will be needed, but in most cases, it would be your birth certificate, information about your bank account so we can establish direct deposit for you. A W-2, if you're filing early in the year, you would like to provide us your W-2 so we can include that in the calculation of the benefits. Also, if you're filing for spousal benefits, so divorce spouses, a marriage certificate, divorce decree. So once you complete the application, you submit to the local office electronically. We review, we'll let you know the documents we need and how you can provide those documents. In the next slide, be prepared in the application, please, to provide us with information about designation of representative payee. A representative payee is a person that can handle Social Security benefits for a beneficiary that is unable to handle his or her own affairs. And we can have benefits payable to children, okay, but children under the age of 18 need to have a representative. But also we can have adults that are unable to manage their own affairs due to maybe a medical condition or different situations, and we need to have a representative. By, you know, people giving us advanced designation of representative payees, we know who to contact. Okay, and that is new, something that we have been doing since March of 2020. So be ready, please, to provide us at the time of application with advanced designation of representative payees. Now, in the next slide, I just would like to invite you to please visit us online, because all the information about all of the benefits that we administer is online when you visit ssa.gov. We have publications, we have calculators, benefit planners. We also have, of course, social media channels. We are in Facebook, Twitter, Instagram. We have a blog and a newsletter that you can register, and then you will receive on a regular basis information about your Social Security benefits. Visit us online, please, ssa.gov. And I'm going to stay online to answer any other questions that you have, but please know that you have all of this information available in our website. Okay, so please use our website, create your online account, because it's the best way to get that personal information about your Social Security benefits. Remember, we are with you through your life's journey. Get to know your benefits better, visit us online. Okay, thank you for watching this video, and I'm staying on the line for any questions anybody has, please.
I don't see
Any questions?
I don't see any extra comments. Jeff, I see you are unmuted. Do you have a question?
I was just going to say thank you again, and I look forward to the third presentation.
Oh, awesome. Thank you. Medicare. And just for purposes of clarification, so you actually work for the government and you did not contribute into the Social Security system. Is that correct?
Correct. It was with a county government in Maryland, but it was self-insured. It was a law enforcement agency, and it was set up with their own retirement system.
Exactly. So know as a fact that your benefits will be reduced. You might have your 40 work credits, and that only entitles you to receive benefits later on. But because of that pension, the pension will be reduced unless you have one of the exceptions to the windfall elimination provision, is the provision that will impact your benefits. One exception is that if you have 30 years of what we consider substantial earnings. So take a look in our website, and in the search engine, you can just type WEP for windfall elimination provision. That will bring you to the page where the fact sheet is located, and also we have a windfall elimination provision calculator. We will pay you a benefit, that's for sure, if you have your 40 work credits, but the benefit will be reduced.
Okay, thank you.
You're welcome.
All right. Well, I thank you very
Any
much.
other questions?
Diana, this was very helpful and useful, and we hope to see people back again for our next session on Medicare.